Familiar faces. All right, we're gonna give it one more minute, 60 seconds, and we're going to shut off. Welcome to Meet the Lenders. While we're waiting for the others to join, please put your name, the name of your business in the chat box. We have a power-packed agenda today with lots of great information. We have a number of people registered, so I know they're trying to get on, but we're going to go ahead and get started. Again, welcome to the City of Charleston and SBA Meet the Lenders. This webinar is designed to help you with your financial needs. So while we're continuing this webinar, please put your name and the name of your business in the chat box. I am your host, Ruth Jordan, with the City of Charleston's Office of Women and Minority-Owned Businesses. Our technical support is with Brian Garber and Christine Ott, here with the City of Charleston's Business and Neighborhood Services. And your moderator and co-host is William Furman, our Senior Area Manager with SBA. A few housekeeping rules. This presentation is being recorded and will be made available on YouTube. Participants' videos and audio is off. If you have any questions, please use the Q&A box. We're going to try to get to as many questions as possible at the end of the presentations. Our agenda will include updates from SBA. Our lenders presentations will come from the Klein Fund, South Carolina Community Loan Fund, Providence Business Financial Services, Beacon Community Bank, Optus Bank, and TD Bank. And again, we will allow you to have Q&A at the end, but please put your questions in the Q&A box. We're going to pop up a poll questions because we'd like you to participate. Christina, what is the poll question for today?
Sure. Can you let us know if you're a woman or minority business owner joining us this morning? We'll give it a couple more seconds. We got almost everybody. Are you a woman or minority business owner? All right. Great.
Wow. The results are 90% so far that's on the phone, that's on the webinar today is a minority-owned business, whether woman-owned or minority-owned. And so we're going to get started with our first presenter. Our first presenter today and our moderator is Mr. William Furman. William is the Senior Area Manager for SBA here located in North Charleston. He has 30 years of experience with SBA and USDA. He's responsible for the 10 coastal counties of South Carolina. William is an expert on SBA lending services, government contracting programs, economic development, and especially an expert on SBA COVID-19 relief. I present to you and introduce to others, Mr. William Furman, our presenter and co-host for today.
Thank you so much, Ruth. It's great to be here. Want to, number one, thank the City of Charleston and all your staff. You guys have been the best. We have a great partnership between the City of Charleston and SBA, and so it's paying dividends and with these types of programs. You know, we like to try to do something in partnership with the city at least once a quarter. And so, you know, we're able to put these types of programs together. You know, Ruth talked about, you know, what I do for SBA. My office is in North Charleston, but I'm a one-person office. So it creates a bit of a challenge when I'm trying to pull events off like this. So City of Charleston has the manpower and expertise to help with this. And so, again, we really appreciate them doing that. I also would like to thank all of our lenders here today. We have put together a very unique program, I think, whereas we have pulled together lenders that, while they may cross over to some degree, they each offer something special if you're looking for access to capital. So, whether you're seeking a very small micro loan, or whether you're seeking a loan for a large project involving real estate, we have it covered here today. And then everything in between. So, I'm really excited about that. In the past, we've done events that we call lender matchmaker events, and we tried to connect businesses seeking finances one-on-one with commercial lenders. Pandemic had something to do with that, and we haven't been able to do that now for a couple of years. So this is what we've come up with, and I think this is a really good alternative, and I think you'll be able to get a lot out of this today. So as you're listening to the lenders, just listen for a few things. You know what your particular needs are. But listen up, and see what they say about what they can do for startups. All lenders will not finance startups. Some will, some won't. Some may have some special requirements. So that's pretty key. Also, loan sizes. There's we have lenders here today that will do small loans, but they can't do large loans. We have some lenders that can do large loans, but they may not do smaller loans. So that's very important. Equity requirements, what do they require? Of course, everybody requires skin in the game. SBA requires skin in the game, but what are their equity requirements? Some lenders, all lenders are not the same. Some lenders prefer to lend to certain industries and certain types of businesses. And so that's something key to look for today. And then, the types of loans that they may offer. We have a lender here who specializes in specifically fixed assets or real estate loans. And then we have other lenders who may do just more or less working capital loans. So that's, depending on what your needs are, pay attention to what they say. I will go ahead and give you a heads up at the end. We do have the contact information, a slide with contact information for everyone on the program today. So, if you need to follow up with one of these individuals specifically, you will have that information. So with that, I do want to, there are a few things that I have to go over. And so if we can go to the next slide. And so Ruth said, I'm an expert in COVID-19 programs, and oh my goodness, that's all I have done for like the last 19 months. This particular program today is one of the first programs, where we're trying to get back to what we are supposed to be doing, not COVID-19 relief. So, we are coming to the end. And so this is very important that you understand what's still in play. These programs will end on December 31st of this year. So we're coming down into the final days, and this is all we have available at this point. We do have the Economic Injury Disaster Loan Program, and it has been changed somewhat in the last couple of months. We have increased that maximum loan amount to $2 million. This is a long-term loan. This is a loan that comes directly from SBA. The term is 30 years. Small businesses, the interest rate is 3.75%. And so it's a great option. And another change that has been made on this is that you can use these loans or the funds to make loan payments on any other commercial loan you have. And not only regular loan payments, you can use them to prepay payment. So, if you have an outstanding loan with a short term, high interest rate, you can actually use the economic injury disaster loan and pay down a major chunk. You can't refinance it, but you can pay a major piece of that off. And basically what you would be doing is converting that into a 30-year fixed rate loan at 3.75%. So that's very key. The other piece of this is our EIDL advance programs. This is the grant portion. I'm not going to go into too much detail there, but we do have a targeted idle advance and then the supplemental targeted advance. And those are basically grants that are available for businesses that are located in a low income community. You have had a loss of revenue and that would qualify you to receive these advances. Now, again, the deadline for this is March 31st, or sorry, December 31st of this year's on the economic injury disaster loan. As long as you have applied for that, it can be funded in the year 2022, but you've got to have your application in by December 31st. But don't wait on that. Go ahead and do it now. Now on the advances, you would actually have to receive that advance by December 31st. It cannot roll over into 2022. So just want to make sure that that is clear on those. It's very important information here from SBA right now. And so with that, if we can go ahead to the next slide, and I will introduce our first speaker. And the first speaker is Mr. Jerry Jenkins. He is with the Climb Fund. And Jerry, I don't think that we have actually met face to face. SBA is still 100% virtual. So they're keeping us locked up and aren't letting us out. But you know, the Climb Fund, you may know the Climb Fund as the LDC. They recently did a rebrand, now known as the Climb Fund. They are and I don't want to steal Jerry's thunder either, but they are an SBA micro lender. We've had a great relationship with them for many years. So with that, I'm going to turn it over to Jerry and let him explain what the Climb Fund can do for you.
Yeah, thank you so much for that, William. Yes, and I want to just thank the city of Charleston for giving us the opportunity to come before some of these great honors to speak about the Climb Fund. And yes, to speak on what William said, yeah, many of you may know us as a Charleston LDC. We rebranded ourselves last year to the Climb Fund. And a couple of reasons for that is one of the main reasons that we're now statewide, so we can fund across the state of South Carolina. Also, it kind of like we want to help our owners climb up. So it's kind of play on that word also. But we are a 501 nonprofit certified community development financial institution. So we call ourselves mission lenders. And what we want to do, our core mission is minority ownership, female ownership, and veteran ownership. With that being said, we lend to everyone, but that's our core mission. And if you look at our goals, basically what we want to do is help startup businesses, existing businesses who may need to get that funding. We know a lot of banks don't lend to startups now. And one thing I want to say is that we don't compete against banks, we partner with banks. What we want to do, especially if there's a startup business, what we do is bring that business in, and so much of what we do happens after the funding is made. We're very intentional in making sure that our business owners have that assistance they need. So we hire consultants. We also have an in-office consultant by the name of Charlie O'Brien, who and his team, who really help the owners and everything from accounting to HR to technical assistance, anything that they may need to help their business. We have those consultants that can help them. So that's why it's so important. And then through that process, we kind of graduate them to traditional banking. So we like to say we bring in an owner that may be not as experienced, and through the process, we help them become more experienced and then graduate them to the level where they can then go on to traditional banking and get lending that they may need. We also do Gaap Funding, and that's for that traditional banking client who may have not got all the funds that they they request it. So we can come in and do a Gaap funding to help them meet the needs, whether it be for bill out or for working capital. We can come in and do that also. And we also we have several programs that we work within our community. One of those programs is a LAMPC program. It's a local program here in Charleston. That program covers some of the 5 most impoverished areas in North Charleston. We also have a program we work with Goose Creek, the city of Goose Creek, them at James Island, for those businesses who have special needs that we can work through the town and cities to help them through funding. As a client fund, as we grow outward from Charleston into the Orangeburg, into Richland, into Beaufort, Hampton, into those counties, as we move up toward those counties, what we do is look for referral sources like SBDC, SCORE. We also work with the Chamber of Commerce. We also work with local grassroots organizations, just to make sure that we're covering and trying to meet the needs of every business owner that's in those communities. So the client fund, and just real quickly, we lend. We don't have a minimum or a maximum that we can lend. What we look at is cash flow. We have that. We say 250. But we can go over that if you have the cash flow to sustain that. Our time frame in which we process our loans is basically from 30 to 60 days. That depending on our application volume. Right now we're really busy, so that may last a little longer. But we say to our clients is that you kind of drive that. If we need any information, try to get it to us as quick as possible. But also, and we don't help with what is called like business to building your business plan, but we do refer you out to outside sources for that. But we are here to help you in any way in funding your needs. And not to repeat myself, but those startups, companies, businesses that may not get the opportunity with traditional banks, we are here to help you with that. Those businesses that are existing that may need funds. All of us are coming out of COVID, and so much of us have been impacted by that. We have, through the city of Charleston, we still have EDA funds, COVID relief funds that can help you, even if it's a positive, negative. We had some businesses that came out of COVID that really grew and they outgrew their funds. We can help with that. Our businesses that were hurt due to COVID, we can help you sustain funds too. So there's a variety of pots of money that we have that we can help small businesses throughout the community.
And Jerry, what's the typical range of your interest rates?
Great question. Our range anywhere, we can start at 2%. We have a high of 11%. Our average interest rate is around 10%. So we are a little higher than traditional banking, but we're basically priced for the risk. So 2% is the lowest money we have, but we go no higher than 11%.
And can someone come to you as the first line, or do they need to have approached a traditional bank first?
Yes and no. They can come to us. We do ask that you have a declination or decline from a traditional bank, because like I said earlier, we don't compete against the banks. We're a partner with the banks. And we want to make sure that you're not a traditional bank type of client, especially if you're a startup, because we don't want to put you in a situation where you are having to pay for a loan that may be higher interest rates. So yes, you can come to us, but we do like to see that declination from a traditional bank saying that you have been turned down. And that way we know that we're not put you in a situation where you're paying a higher interest rate.
Okay, great. So we're going to save a few questions right after Joseph, because there's a number of questions in the chat box. And I know that people are chopping at the bits to hear our next presenter. William, you're on mute.
Yep, let me get off of mute. So thank you. And our next speaker and next presenter is Mr. Joseph Dukes. He is with the South Carolina Community Loan Fund. the South Carolina Community Loan Fund is another organization that we would call a non-traditional or a non-bank lender. And they are another group that is very vital to assisting businesses, small businesses with capital access. And so I think you're really gonna, you'll really like to hear what the South Carolina Community Loan Fund can do. So with that, Joseph, I'll let you take it away.
Thank you so much, William. Good morning, everyone out there listening. So I'm going to talk a little bit of who we are as the Loan Fund. So we started basically out of here in Charleston as Low Country Housing Trust. So I guess what initially pumped through our blood was we were a affordable housing organization because, as you all know, like living in Charleston and surrounding areas, there is a housing crisis, and the organization was essentially founded by the Charleston Mayor's office to be on the front lines of helping resolve that affordable housing crisis. And fortunately enough, or unfortunately, depending on your perspective, we're still fighting that war. But from becoming an affordable housing organization, we realized that the neighborhoods that we were working in, there was a lack of capital available to people who wanted to start like a small business or a community facility or have a healthy food initiative in their neighborhood. So I'll pause and kind of explain what all that means. So like, small business, most of you all are here because you're looking for like a loan for your small business. Now, in addition to that, the loan fund also does loans for what's called community facilities. Now, community facilities is a broad phrase, so I'll start with what's probably the smallest thing to the largest thing we can do. So the smallest thing for a community facility loan would be like if you're in like a rural town. I don't think any of you are looking to buy an ambulance on this call, but if you go from like some of the rural communities that we serve, they need help with like this providing frontline services for the community. So someone from rural town X can come to us and ask for a loan, hey, for a loan for saying, hey, we're looking to expand our emergency services and we need help to purchase an ambulance. Well, that would fall under the purview of our community facility loans. On the largest side, it can be something like the town of Hollywood's town hall. That was another loan that the loan fund did. Just trying to give you a broad scope of what type of services we offer. In addition to that, we also offer healthy food initiatives, and healthy food initiatives kind of fall under it's like a hybrid based on our small business product. So if you're looking to open like a fresh market or some sort of mobile or grocery store in your neighborhood because you live in a food desert, and the food desert is defined by per the HUD definition, is that if you don't have like a place you can buy fresh produce within a 5-mile radius of where you live, and therefore you live in a food desert. Or I like to use a more colloquial expression, if your grocery store choice is like the Family Dollar or Dollar General, you live in a food desert. That's kind of like how the best test I could tell you for that. But all those programs are kind of based on what the loan fund looks to do as an org as a whole, which is community building. Now, specifically to our small business loans, the most common question I get is, what does my credit score need to be? And I try to lead with this because I know in the back of a lot of people's minds, that's the question they're wondering. So I tell people I've done loans since I've been at the loan fund for 3 years now. I've done loans to people with credit scores in the 500s and up on near toward the perfect side. So I would tell people the only disqualifiers we have, which doesn't mean you can still get a loan even if you pass this threshold, but I cannot do a loan for you if you have like a current tax lien, which means you have like a tax bill that's not at least in repayment, or current bankruptcy. Now, can the bankruptcy be discharged and come to get me and get a loan? Absolutely, but it must be resolved before we can actually take you on as a client. Now, the second most common question after that is, how much money do I have to put down? I always answer that kind of vaguely, which sometimes frustrates my clients. It depends. Here at the Loan Fund, we try to be creative with like the equity contribution, but as William said earlier, you must have skin in the game. You can't come to me and ask for 100% finance. That's kind of like, that's a non-starter for me. Now, if you can make the case that you've done X, Y, Z and put this into your business, and I can see per your sources and uses or per your bank account, you're willing to put up some money in to a business, we can work with that. Per our regulations, we ask for at least 10%. But that's not a requirement. It's more like a suggestion. Our goal at the Loan Fund, pure and simple, is to provide equitable access to capital for all communities, particularly low to moderate income people who have been historically kept out of the traditional banking sphere. So when business person X wants to start a business, they've done bank shopping, they went to the traditional institutions, and they've been told no by all of them. My job as community development lender is to figure out how can I best serve them. I try not to work to be a detriment. I try to be a helper in this situation. Will that always mean that you're going to get immediate yes? I'll be frank with you. I mean, probably not. It means that but I will promise you that I will help you put in the work to get there. As my esteemed fellow Bulldog, Jerry, mentioned before I got on, that we have people here from like the SBDC or around town in SCORE. He help people develop business plans and help them refine them. When you come to me, I will read your business plan, or if you don't have one, I will make the referral. But what my job as the lender on the call is to help you kind of refine your business plan to get to the point where you're ready for a yes. And sometimes it's not solely the business plan. It might be some things on your credit report you need to resolve, or things within, like you may not have enough financial wherewithal to take on any more debt as an underwriter. But all those things I don't operate with a hard no. I just say, I tell clients, it's not right now time. There's something I need you to do to be able to help you move forward on before we can lend you some money. Kind of like the thresholds for like interest rate, our average interest rate so far this year is 7.25%. But with how the loan fund raises capital, we're not a bank, so we're not a depository. We're bank adjacent, as I like to say. So a lot of the capital we lend out is either loaned to us from other institutions to meet their CRA requirements, or invested. But with that, there's attributed a cost of capital. So when you see like our interest rate or the client fund interest rate, it's going to be a little bit higher than what you would get at like Synovus or PNC, mainly because we're not a depository. So our average interest rate is about 7.25%. Per our regs, we can't go any higher than 6 points above prime. That we just changed already. Sorry. So that's kind of like the floor and the threshold. The highest interest rate I've seen since I've been at the loan fund is 9.25, and it's really adjusted for what type of risk we're taking. Typically, when a loan is real estate secured, the risk profile goes down. When there's no real estate involvement, it's like a personal guarantee, and you're using a loan to buy, working equipment for your loan, or like just regular old working capital. The interest rate is going to be higher because there's no real estate attached to it, which the bank loves because it protects their investment in you. Doesn't mean we're not going to do it. It means you're going to pay a little bit more capital. But I tell people when they hear the interest rate, they go, "Ugh, why are you so high? Is that predatory?" Like, no, believe me, that's not predatory, particularly here in South Carolina. What it is that we have to mitigate the risk for doing a loan. But where a traditional institution doesn't want to loan to a startup typically, and they by and large don't want to lend to anyone who doesn't have any real estate to offer, we would do those loans and fill the void. In addition to that, we will work with you when you're even not ready to continue to build you to a point where you are ready. I tell people, like, once you come to us or me or anyone who works at the loan fund, even when it's like a not right now situation, we're happy to help you work to get to the point where you're ready to borrow. And that seems to be, I feel that what differentiates us from the traditional lending institution that you may go into, is that we honestly do show an investment in the people that we get to serve. And that makes us the best first stop for you. Because like a lot of times with the people like the loan fund, we're like the first money in on the projects. We're taking the typically larger risk to get something done. But that's my pitch. I'm happy to answer any and all questions at the back end of this. But William, thank you for having me.
Well, first we want to say thank you to our non-traditional lenders. And this is a great question. Maybe some of you have never heard of the Client Fund or the South Carolina Community Loan Fund. These are all non-traditional lenders that's available for startups and existing businesses. And we have just a few questions. I knew that we were going to try to hold them all to the end. However, our question box are enlarging. So we thought that we might want to, at this point, ask just one or two questions. In the industry, is there a standard 3% loan origination fee for loans? And that question can go to Client Fund or Community Loan Fund.
Yeah, I think let's just go ahead and that question should go to all lenders so we can see exactly what the requirements are out there. So whoever would like to jump in, if you will answer that.
Well, William, this is Jerry from the Client Fund. Yes, I don't know if it's a standard, but that is our standard. Yeah, we have a 3% origination fee that applies to every loan. Yes.
Okay.
Say for us, we went up from 2 to 3. It's like, not to get too much inside baseball, but it's tough for us to raise funds to do the loans. And that's kind of, and pay people, like I have 2 kids. I like to stay, with the home and keep them fed. So sorry, but we'll do, we'll take the risk. So I understand, like, the bar, like, I just want to keep the cost out of me, and I get it. But like within that, I can't speak to the client fund. I do, for the loan fund, we do try to be as flexible as we can while trying to resolve like the fees that are attached to our loans. But on it, as advertised, it's going to be a 3% origination fee. There's like a loan term fee, which is $100 for each year of the loan. The amortization on most of our loans is between 5 and 15 years for the most part. And that's kind of the standard, just the cost of doing business.
And if I can add one quick thing, we also allow that 3%. You can choose to either take that 3% out of the loan proceeds, if that will help you better, or you can decide to pay for it, out your personal funds.
Okay, any other lenders would like to weigh in on that cost of doing business? 1 or 2 or 3, 2 to 3%? Is that a traditional?
This is
loan
Brooks
origination?
Melton. This is Brooks Melton with Beacon Community Bank. And, we're in a different place on the risk spectrum. We're more conservative in our appetite for taking risk. And it's being a depository institution, we have a completely different business model. Our fees typically are between 0.25% and 1%. But again, and I'll get into a little bit of that later, but it's a different place on the risk spectrum.
And that is so true. The greater the risk, the higher the cost. The greater the risk, higher cost to doing business. Another question, are idle loans forgivable up to a certain amount? That's a William question.
Yeah, so that's a good question. So again, idle loans are made directly from SBA, and they are a loan. That no part of an idle loan is forgivable. The first 24 months of that loan is deferred, meaning that you do not have to make loan payments for the first 24 months, but then you will have structured payments on the entire amount of the loan for the next 28 years. So nothing is forgiven on those. The only forgiveness offered was through the Paycheck Protection Program, and that program is now over, and I don't anticipate that we will see that one again. We're actually going through the forgiveness process on those now, but idle has no forgiveness at all.
Okay. Does business credit matter when securing financing? I have a great business credit score with Dunn's and Experian Business. Do lenders only consider personal credit, or they also consider business credits?
Yeah, now if we can get everybody, that's a really good question too. And I think we're going to see a lot of diversity on this. So if we can have, Climb Fund and South Carolina Community Loan Fund, and then some of our commercial lenders answer that, I think we'll see some major differences there.
So with the Climb Fund, we definitely pull your credit. We always say we look beyond the score. So although we look at your credit score in terms of your personal credit score, there's things that we can accept that I think that, not to speak for banks, but banks can't do. We ask for a letter to explain certain things in your credit. In terms of the business concern, we do pull the Dun & Bradstreet report to show that your business is in good standing. If your business is not in good standing, then we cannot at that time offer a loan. But like Joseph said, we try not to say no, we try to say not now. So if we give you opportunity to go try to clean those up, and if you can, then we can try to move forward. But just to answer your question, we do pull that report to see if your business is within good standing.
Okay, some from our traditional lenders. Let me hear from one of the traditional lenders, and then we're going to go ahead and get back started with our presentations.
Hi, Ruth, this is Michael Nayote with TD Bank. To answer the question directly, we do not hinge our decisions based off of the business credit scores that can be reported. Personal credit absolutely matters. The financial performance of a business absolutely matters. And we generally underwrite our loans to the business itself based on the financial position of the business. So in some cases, I know that there are even some third-party financing companies that hinge their credit score or their credit decisions on Dun & Bradstreet credit scores, but that's not necessarily something that we do in the commercial world as much.
Okay,
Michael, do you have a firm number on the personal credit score?
We do not. I'd say generally the approvals that we see, and I'll talk to some specific products that that are more based on personal credit. But I would say the mid 600s is generally where we see the approvals start to lead off. It's all kind of dependent on the entire package. So industry matters, time in business matters, financial performance, if that's existing, matters. But personal credit's obviously going to be a piece of that, but there is not necessarily a hard and fast number.
okay. And Optus Bank was trying to weigh in?
Yeah, no, I would agree with what the gentleman at TD Bank mentioned. We really kind of look at each situation individually. We don't really look at business credit. However, we are looking at personal credit history and performance of the operating company more so. And so Dun & Bradstreet really doesn't come into play with us. We do research the business to make sure that the business is a viable business, that there are no specific liens or anything against it, but we're really looking at the cash flow and the operations of the business itself and the personal credit history of the majority owners of that business. As far as credit scores are concerned, we don't necessarily have a minimum credit score because we do understand life happens to people. But what we do look for is just to determine what the story is behind the issues. Historically, what we've seen on average credit scores range in the mid to lower, from lower sixes to higher up. But again, it really just depends on what's the story behind it. And so we understand that. So we try to be creative to work with our borrowers.
Very good. I like that. Life happens. So we're going to proceed with our next presenter. William, introduce our next presenter.
So our next presenter, I think if you are seeking financing for any real estate needs, fixed assets, if you're looking to buy your building, if you're looking to construct a building, this is going to be a presentation that you're really going to want to pay attention to. We have Dave Harper with us. He's with Provident Business Financial Services. They are an SBA 504 lender, meaning that they are what we call a CDC, Certified Development Corporation, and they partner with SBA. And I don't want to, Dave, I don't want to step all over your toes and steal everything from you, but they partner with SBA to finance these types of projects. So really a great opportunity if you're seeking fixed asset financing. So Dave, thank you again for joining us, and I'll let you take it away.
William, thank you so much. I do appreciate that. And yes, we are in a partnership with SBA, but also with a partnership with banks and lenders. And in fact, all the panelists, we've had a working relationship in some capacity. The SBA 504, and I always joke that it's a government program. SBA has multiple programs, and there's two big ones, 7A and 504. And I always joke that because it's government, we got really cool names, 7A and 504, right? So no one can really remember those, but the 7A, and I'm not going to talk about 7A, but it really is designed more for your classic small business loan, working capital, business acquisition, equipment purchases, where the 504 is designed specifically for commercial real estate and fixed assets. Now, the big part of our program obviously is commercial real estate. So if you're looking to buy your building or construct your building, then yeah, we need to talk. If you're looking at just buying a business or needing working capital line, then you want to speak to one of our other lenders. Now, as I said, we do partner with all the banks. We have a partnership pretty much with every bank and lender in the state. Provident is headquartered in Columbia, and I'm actually here in Charleston. I run the Charleston office. We're the largest CDC, Certified Development Corporation. We're a not-for-profit, and we are licensed and regulated by the SBA. As I said, we do commercial real estate loans. We are an SBA lender. What's our commercial loan requirements? Well, we're a cash flow lender, and pretty much like all the lenders on the panels today, we lend based on your cash flow. That's most important. The question about credit came up. Yes, that's part of our decision-making process, but cash flow at the end of the day is the most important decision matrix that we look at. Essentially, nobody wants to put a business into a loan that they can't afford. So a cash flow lender, we like to put you into a loan that you're able to repay. Dirty little secret in cash flow lending is we don't want your collateral. We just want the loan to be repaid. Yes, we do lend to small new businesses. As I said, our partnership is with other lenders, and the structure of our partnerships, basically, it's two loans. The bank or the lender or an SBA parlance, third-party lender, does 50% of the loan. Provident, my company, we do either 30%, 35%, or 40% of the loan. And then your equity injection or down payment is only 10%, 15%, or 20%. Why the difference? If you're an established business, i.e. 24 months or more in business, your property is not a single use or special purpose property, then it's 10% down. If you're a new business or have a single use or special purpose property, then it's 15% down. If you're a startup and single use special purpose, then it's 20% down. Now it's all relative. If you were getting a conventional commercial real estate loan, it wouldn't be 10, 15, 20. It'd be pretty much double that. So the whole point of the SBA program is economic development, or more specifically, job creation. So that's why these programs are available to you. The loan structure, as I said, is essentially 50, 40, 10. So if we got an example of $1 million loan, the bank would do 500,000. SBA or Provident would be due 400,000, and you'd only have to put in 100,000, as opposed to a conventional commercial real estate loan. That number for you would be 200,000. So you get an idea of definitely the cost savings to you, how it's really designed to help your small business grow. And that's the whole point behind the program, is to help you grow, to expand, to hire more folks. So I talked about our equity requirements, collateral coverage. Yes, obviously the property is part of the collateral. It has to be greater or equal to or greater than the value of the loan. Our lending area covers the entire state of South Carolina. So no matter where you are in South Carolina, we do the loan there. Happy to do it, happy to travel, meet with you, talk to you about it. Actually, since I'm headquartered here in Charleston, I cover all the eastern part of the state. Do we have preferred industries or industries we can't lend to? No really preferred industries. Obviously, we can't lend to industries that none of the lenders can lend to, that are, adult entertainment and stuff like that. But anyway, all preferred industries, we can do pretty much every industry that, needs a loan. The issue is we have to partner with a bank. So whether we can do, say, hotels, maybe the bank partner doesn't have an appetite at that point to do hotels. So what we do is help play matchmaker and help find a lender that does want to do that industry. Minimum loan size, really don't have a minimum loan size. I think the real estate itself kind of drives that. Being that the bank's doing 50% of the loan, we tend to try to do a total loan project of 250,000 or more. We've done less and certainly entertain all loans. I don't write off any loan based on just loan size. As I said, commercial real estate, and certainly in the Charleston metro area, it keeps going up. So that helps drive that. The list of questions here, William asked me to address. Do I have any suggestions or recommendations to help businesses become lender ready? Yes, I do. Business plans, I think, are critical, and we'll probably talk a little more about that. I think a business, whether the lender needs it or not, all successful businesses have a roadmap, and that's their business plan, and decide where you're going. The key things we look for, as I said, is cash flow. Obviously, your credit worthiness. We don't really have a minimum credit score. Obviously, the mid sixes is ideal, and that tends to be typically industry standard for cash flow lenders. However, we have done loans for businesses with lesser credit, provided there are mitigating circumstances to explain the reasons behind that. So really, that's the 504 program in a nutshell. It's for commercial real estate. The other highlights or benefits of the 504 program, obviously, as I said, we can do up to 90% financing. So obviously, you still got to have a little skin in the game, 10% down as opposed to 20% for a conventional. Longer loan amortizations, up to 25 years. Your SBA 504 loan will be fixed in a rate for 25 years. It will not be pegged to prime and change every time prime moves. It is fixed for 25 years. It's much more in line with, say, a residential mortgage. Your loan is fully amortized, so there's no balloon payments on your SBA portion of the loan. Our bank partner will have a balloon payment, but it's actually extended by 5 years for a 10-year term, as opposed to the conventional commercial real estate, which has a 5-year term. As I said, fixed rates for 25 years. Right now, if we closed the loan today, it would be about 3.2%. So again, another additional area to save money by using the SBA 504. As I said, the 10% down, it gives you more purchasing power. You can possibly buy a larger building, take the additional 10% savings you're using, or keep more money in your business, reinvest it, hire more employees. The savings by using the 504 helps your cash flow. Obviously, cash flow lenders like to see that. The application process, we streamline that and make it simplified. That is the CDC's job. We are the ones that engage with SBA. The bank partners don't do that. Essentially, their loan is a conventional loan. For all intents and purposes, they're doing a conventional loan just in a partnership with us doing an SBA 504. But you don't engage with SBA. We do all that. We make all the paperwork as painless as possible. But any commercial real estate loan, whether it's conventional or SBA, you're going to have paperwork. So, and we always underwrite to the business. So we need to see all the business financials. And as I said, we partner with all the current banks and credit unions in the state. If you're looking to do an SBA 504 and you've spoken with your bank, let's talk and we'll partner with them. If they haven't mentioned the 504 and you're looking at buying real estate, ask them about it. I'm happy to talk with them and you. So I think that's the rest of my slides. Any questions?
I think just for the sake of time, we'll keep going and have the rest of the Q&A at the end.
Okay. All right. Great. Thank you very much again. And there's my contact information. Feel free to reach out to me. Always happy to answer questions. Even if it's not for a 504, I get a lot of questions a lot of time about other SBA programs. I'm happy to answer what I know and then refer you to my partner, William.
Thank you, David. And so up to this point, you've heard from non-traditional or non-bank lenders. So we're having a kind of a natural progression here. And so our next speaker, our next presenter is Brooks Melton with Beacon Community Bank. Beacon is a locally owned community bank here in Charleston, and I met Brooks during the height of the pandemic, and I will have to say that Beacon Community Bank did an excellent job for the Charleston community in assisting small businesses that were having difficulties obtaining PPP loans. And so they really came through in the clutch for a lot of small businesses. And we certainly appreciate that. And so Brooks, thank you for joining us today. And I'm just going to let you take it away and talk about, your lending programs at Beacon.
Thank you, William. And William's right about first meeting during the height of the pandemic. And to give you a little history on Beacon Community Bank, we started in January of 2018, so we're not quite 4 years old yet. We were $25 million when we opened the doors, and we're now $350 million. So it's been a pretty rapid growth rate. We can, as a bank, we can actually relate to those folks, those entrepreneurs and small business owners that are trying to grow a business. We too need all the help we can get in terms of checking accounts and deposits, and that's what helps make it all go around. But we were established really to support this community. When you look at market share in the overall Charleston area, if you go back pre-recession, community banks that are based here in the Charleston area had almost a 20% market share. When we opened our doors in 2018, community banks had less than a 3% market share. There was only one based here. Now there are two, that one that was here in 18 and us. And so we were established really, truly to fill a void and to serve the community. And PPP for us gave us the ability to really live out that mission. William didn't mention it, but he made me promise. I was having trouble getting our bank access to the SBA's portal. And I won't say anything bad about the SBA, but it was frustrating. And William helped get that access turned up for us so we could jump in. And he made me promise that we would do 7A loans after we got past all this PPP stuff. So we are not yet an SBA lender beyond PPP. One day we will be.
Brooks, I haven't forgotten either. I didn't want to call you out on the spot, but I haven't forgotten.
I figured you hadn't, and we'll live that out here eventually. But we are to date a traditional lender, and so we've heard from a couple of non-bank lenders that serve a vital role in creating jobs and helping folks establish new businesses. And one of the fundamental questions that I think William wanted addressed is what can you do to get ready to be financeable, to be bankable, to be able to get a bank loan? If you stop and step back for a minute, as a FDIC insured depository institution, we're highly regulated. There's lots of rules that we have to follow. And that's because the FDIC guarantees people's money that is on deposit with us. And so they want to make extra sure that we make conservative loan decisions and don't put those deposit funds at risk of loss. And so we are, admittedly, due to that structure, we're typically more conservative. That doesn't mean we're not entrepreneurial. That doesn't mean we don't have an interest in helping folks start new businesses. It just means that in some instances, maybe we come along later in the life cycle, or in other instances, maybe there's a credit enhancement that helps us work together. And so you can think about the SBA as a credit enhancement, but even the most well-established and financially strong borrowers that we deal with, we require credit enhancements from them. So a company that kicks off a lot of cash flow, we still want the owners to guarantee the loan. We still look at the owner's personal credit. We still rely on the financial commitment of that owner to back the loan, to support the loan. And so whether you're starting up and you're brand new, or whether you're old and established, we still look for credit enhancements. With a brand new business, you don't have the track record of 2 or 3 years financial history, generating positive cash flow sufficient to cover your loan payments. And that's where the need for a credit enhancement comes into play. And so one avenue you can go is to find an investor, find somebody that's willing to give you some financial backing, that's willing to invest in your company, that's willing to provide a guarantee alongside with you. Another route you can go is collateral. So to the extent that you've got resources and wealth in the form of collateral, or you've got a family member that's got resources or wealth in the form of collateral that you can pledge to help support the loan, those sorts of credit enhancements help us be able to help you. Talking about it in terms of life cycles. So if you go to Climb or the South Carolina Community Loan Fund, and you get established, you get on your feet, you get your profitability to a level where you have more of a bankable profile, we're happy to come in, and at that point, perhaps we can refinance it. And our rates today typically have a 3 in front or a 4 in front. The highest that we've done in recent months has a 5 in front. And so we do all types of financing, both consumer and residential, as well as commercial in the commercial arena, which is what we're primarily focused on. We finance commercial real estate, both for owner occupants as well as for investment purposes. We finance office buildings, retail, industrial, all types of commercial real estate. We do operating lines of credit. We finance equipment. And so really we do any sort of commercial loan that makes sense for our credit profile. And so we are not unlike, in a lot of respects, not unlike any FDIC insured depository institution in terms of our underwriting standards. And you've heard it mentioned even by the alternative or the non-banks, the Climb and South Carolina Community Loan Fund. Everything's cash flow driven. And so I'll echo what we've already heard. Have that business plan, have that document, that presentation that clearly articulates what the purposes of the business is, how it makes money, projections for revenue, detailed analysis of the expenses it takes to generate that revenue, and then what kind of cash flow can be generated to support debt repayment. None of us on this call, I'll speak for myself, we are in business to make money. All of us on this call are in business to help support our community. None of us want to make a loan to somebody that ultimately is not able to repay the loan. That's not good for anybody that's involved in the situation. And I heard it mentioned earlier that we don't want your collateral. And so when you look at a promissory note, all of them are going to say, we want to be repaid in US dollars. And so that comes back to that business plan, and having that backup and that support that shows either historically the business has been able to generate sufficient cash flow to repay the debt, or on a pro forma basis based on rational and documented assumptions, the business is going to be able to repay the loan. The equity requirement, down payment, I'll give you the depends answer. It depends on the financials that are behind the request. It depends on the collateral. It depends on a lot of other factors. Those are the two that impact the equity requirement, or the down payment, if you will, more than anything. Geographic lending area. We are primarily focused in the greater Charleston area, Berkeley, Dorchester, Charleston County. Preferred industries. We have very few limitations. Really comes back to does it make sense? And I think I've probably taken most of my 10 minutes. William or anybody else, anything else you want me to touch on?
Yeah, Brooks, do you have and I know this is probably a depends question as well, but generally speaking, what is the minimum loan amount that you're looking for? What's the smallest size loan that you may consider?
I would say that I think to date, the smallest loan we've made is $5,000. Our average loan size is about $500,000. And, there's really, the minimum just doesn't, there's very rare that there's a minimum that comes into play for us.
Okay, good to know. And so at this point, I think I do need to mention a couple of things, or else I'm going to get in trouble. We've talked about business plans, and we've talked about other resources for help. And so SBA does have what we call resource partners. And these are organizations that you can work with one-on-one at no cost to you or the business. SBA provides them funding and oversight so that they can help you with your business plan, help you put together a loan package to take to these lenders. And in Charleston, we're very fortunate. We have the Small Business Development Center, we have SCORE, and we also have I Hope Women's Business Center for women-owned small businesses. So you can get the contact information for all of those resources on our website. We've posted that in chat, but it is www.sba.gov/SC. And so with that, I would like to go ahead and introduce our next speaker. And the next speaker is Kevin Butler. He is the Senior Vice President of Commercial Lending with Optus Bank. And so they are another community bank, and again, another one that really helped out the community during the pandemic with PPP loans. So again, thanks to Optus for that. That was really a big deal at the time. And so with that, I'm going to turn it over to Mr. Kevin Butler. Thank you, Kevin.
Oh, good morning, everyone, and thank you, William, for the introduction. As William stated, Optus Bank has been around. We're actually headquartered in Columbia, South Carolina, and however, we do business all throughout South Carolina and into North Carolina. And so, just a little bit about Optus Bank. Optus Bank is a community bank with a mission-driven purpose. The bank itself has been in business since 1921 under various names. And up until about 15 years ago, we took on the title and the name of Optus Bank, the new ownership. And so our mission is kind of like any other, unlike any other bank or traditional bank. We always say that our bank is mission focused. We want to make money. We do focus on margin, but our goal is to be more mission. We want to strengthen our communities, and we do that by transforming wealth into opportunities, regardless of where people fall on the wealth building journey. And so that's part of our mission. That's who we are. We want to be able to provide wealth building services outside of traditional banking services, but at the same time provide loans and banking services to businesses, individuals in the communities we serve. And so with that being said, we're a full service community bank. We offer depository services, everything from checking, savings accounts, CDs, all those type of things, to residential mortgages, and of course, what we've come to talk about today, business lending. And that business lending platform really falls into different categories. Falls into category of small business lending and medium-sized businesses also. And under that, we focus on different types of lending products, just like any other bank would. We'll finance commercial owner-occupied real estate for purchases and refinancing. We'll also look at programs for commercial and residential investment real estate purchases and refinancing. And then we also offer financing for equipment loans if you're a manufacturer or even if you're in an industry that requires some type of specific or specialized equipment. We'll take a look at that for you also. Of course, in addition, working capital loans or lines of credit. We always say, listen, every business at some point is going to need working capital. And so we want to be in position to be able to help you get the access to the capital that you need. And so, we'll do working capital loans, lines of credits, and then maybe you're in a situation when you're looking at acquiring another business, or if you wanted to purchase a franchise, we'll take a look at that with some of the programs that we can offer too. And then finally, we'll look at small business administration type lending. We've partnered with, I think, with Provident Business in the past on certain situations, and not only them, but other CDCs on being able to offer SBA 504 programs and also other with 7A type programs to our borrowers. So there are many ways that we can assist businesses when it comes down to financing specific needs. Now, the type of companies that we're really looking for, and we like to do business with, are operating companies that have been in business for at least 2 years, that have profitability. Like Brooks mentioned, banks want to get repaid, and like everyone on here on the panel today, one of the things that we look for is the ability to be repaid, primary sources of repayment. And so, with that being said, one of the primary sources that we like to see repayment coming from would be the cash flow from the operation of the business. And we want to see that for at least, at the minimum, 1 year of profitable history, and to be able to cover a debt coverage of at least 1.2. And I know some people may not know what that is, but certainly as you talk to your lender, that's something that we can talk to you about and explain what that really means. So in other words, we really just want to look at the ability to be repaid. Your capacity. We do look at your credit scores, but as I stated before, credit history is important to us, but we do understand that life happens. And as a result of that, we want to know the story behind what happened in a particular situation. Now, realistically, we do like to see credit history paid with no late payments within at least the last 12 months. But again, let's talk more in detail about it. We do want to see the operating of the business and the business profiting. As far as equity requirements are concerned, again, that depends on the borrower itself. When I say what borrower, but also depends on the product that we're looking at. For generally commercial owner-occupied real estate, if you're looking at purchasing a building conventionally, in other words, the traditional bank financing, you're looking at about 20% equity. So you're going to put down 20%. The bank would finance 80% of the total purchase of the property or the appraised value, whichever is less. However, through special programs that we partner with SBA, such as 504 that have already been mentioned, that amount could be anywhere from 10, 15, or 20%, depending on the type of property and the risk of the borrower. Excuse me. And then commercial residential investment property, which we're seeing a lot of lately. Because of the market and how the real estate market is doing throughout South Carolina and North Carolina, we'll finance commercial residential and investment property, normally about 75% loan to value. So we look at you to put down about 25% of the purchase price or appraised value, whichever is less. One thing that separates Optus Bank from many other traditional bank financing is we look to be creative. We understand that access to capital is often one of the obstacles for many small businesses growing. Mm-hmm. And we want to be able to provide that access to capital, but be creative in ways in which we can do it. Our primary thing is we just want to be repaid. We want to be repaid. And so one of the things that we're unable to negotiate on is your cash flow. We have to see that the business is profitable and that the business has the ability to repay the debt. If a loan is made, we'll do loans. Generally, we don't have a minimum loan requirement for commercial loans at Optus Bank, but we've done loans as low as $20,000, and we've done loans as high. Currently, our lending limit is around $5 million, but through other traditional ways and partnering with other banks, we can go higher than that. So I'll stop right there, and at the end, if there are any specific questions that we need to answer, I'd love to answer those questions.
Thank you so much, Kevin. That is really helpful, and I hope all of our participants are starting to see the picture now of maybe the terrain or ecosystem of commercial lending and kind of what it looks like. And so we do have one final lender, and TD Bank. TD is one of the largest SBA lenders for our 7A loan program. And so they do a really nice job. And, I haven't talked about SBA lending really other than our COVID program. So we have Stephen Smith and Michael Niati with us this morning. And guys, if you would, when you speak, if you will touch on, how your bank approaches SBA lending and in particular 7A lending and what you have to offer there. I think that would be very helpful. So with that, I'm going to turn it over to you.
Sure. Thank you, William. I appreciate it. Thank you for asking us to be part of this presentation. We're happy to be here. So just to start on a high level, who is TD Bank? We're a 166-year-old bank, initially out of Canada. We've been in the United States for the past 16 years, and we operate along the East Coast of the United States from Maine to Florida. Currently, we're the 8th largest bank in the United States, and added with our Canadian parent company, we're the 6th largest in North America. So we certainly represent more of the larger bank mentality with our peers on this call. We're consistently rated as the 11th safest bank in the world and the most safe in the Western Hemisphere, as evidenced by our more conservative approach and Canadian parentage. And our southern headquarters, we're proud to say, is in Greenville, South Carolina. We employ over 2,000 employees throughout the state, and we're proud to have retail coverage throughout the state as well. I'm going to have Stephen mention a little bit about our SBA credentials to speak more directly to that, William.
Yeah. Good morning, everyone. Thank you for joining the call. Just to kind of give you a little bit of feedback on what programs TD participates in when it comes to SBA lending. So we do have the Express, the 7A, the 504, and we had much success with helping our existing clients obtain the PPP funding. So we're very proud of that and glad to help there. This has allowed TD Bank to be recognized as the #1 SBA lender for units closed within our banking footprint, and also the #1 SBA lender by units in the state of South Carolina. TD Bank processed the 6th most PPP applications nationwide for our customers, a total of over 80,000. TD Bank was recently awarded the J.D. Power Award for the small business in the South region, which includes South Carolina. This recognition proves our commitment and focus on small business and SBA lending here in Charleston and throughout our whole footprint. TD Bank is one of the only banks in Charleston who employ a dedicated SBA lender tasked with managing our 7A and 504 pipeline due to the expertise needed for a great customer experience for loans over $350,000.
And just to William, to drive the point home on the 7A process for us, for over $350,000 loans, our in-house SBA lender is really great at managing that process and working with our partners. 7A can be used for equipment, it can be used for working capital, it can be used for business acquisition, it can, in some cases, it can be used for real estate, but it's really designed for a multi-purpose opportunity for our small business customers that may be looking to preserve some cash flow or extend some terms as a means to provide for an approval. Sometimes with our cash flow requirements, it may put a strain on a small business, and through the SBA programs, we're able to extend the amortization potentially to 25 years, which allows for those customers to achieve that financing where they otherwise may find a decline on a short miss on credit policy. Speaking to some more of our traditional small business lending products, we offer all conventional small business lending products, from term loans to lines of credit to commercial mortgages and equipment finance. And as Stephen noted, we're a leading SBA lender in all markets where we're located. We approach the small business market a little bit different from a lot of our direct competitors and our peers. We have essentially 2 credit policies that manage our small business portfolio. There's an under $150,000 policy, which is generally secured simply by a first lien on all assets, but not required as specific collateral. And it's underwritten as more of a scoring model. So our business decisions are based on all available information from the client, including time in business, financial data, personal credit, the industry that you're in, and any other information. For the over $150,000 policy, that's where collateral becomes a little bit more important, or at least specific collateral becomes more important, where we generally be looking to secure the loan one-to-one. However, as we've heard from so many of our presenters today, we're really more impressed by cash flow than we are by your collateral levels, even though that becomes more important. We do have the ability to lend to new business. It's a program that we're certainly proud of. We can do small startup lines of credit available, starting at about $15,000. That's pretty much where we would be for a new business. We generally give you a little bit of credit for having the business operating, even if you have not filed your first year of tax returns or shown existing revenue. Larger business acquisition and equipment and property purchases using the 7A and 504 SBA products are available for new businesses as well. There's a little bit more that goes into that underwrite based on industry experience and projections and business plan. So it's a little bit more of a wide-ranging underwrite, but at the same time, those options are certainly available. And then conventional lending generally requires at least 1 year financial performance, so we can underwrite that cash flow that we've all hit on today. Equity requirements vary depending on the product and opportunity, but are in line with what we've heard this morning. Generally anywhere from 10% to 25% is most consistent. And that's really dependent on the program or the product that we're talking about. Lines of credit do not necessarily need a down payment, whereas commercial loans need a more significant down payment. Collateral requirements also depend on the policy that we talked about. So on the under $150,000 side, we'd just be looking at that first lien on business assets, which for all intents and purposes is really an unsecured product. It's really hinging on your personal credit and the cash flow of the business. And then the over $150,000 policy, like I mentioned, is generally secured 1-to-1 with specific collateral, whether that's accounts receivable, inventory, real estate, in some cases cash. We lend to any businesses within 100 miles of our nearest store location. So given our wide footprint from Maine to Florida along the coast, that gives us full coverage in South Carolina, as well as neighboring states. And then we talked about preferred industries or less than preferred industries. And some industries inherently present more credit risk than others. Restaurants will always be a little bit more risky than law firms, for example. But with most conventional banks, reputational risk is really where we kind of draw a line in the sand. And I think we've heard a couple examples of that today. Minimum loan size for us is 10,000. Maximum working capital lines are capped at a 15% of annual revenue calculation. And I think that becomes very important because as some of our peers have said, the last thing that we want to do is put a loan or a product out there that the customer is only going to suffer from. We want to make sure that we're adding some value to the business rather than taking that away. And then I love the question, any suggestions for business to be more lendable? I think that's a great question, and I'm glad that we're touching on that today, because I think most bankers, like Brooks mentioned, we're here to help, and we're here to help drive their communities and to build our communities. So a few just off the top suggestions that I would have is be open to advice and non-traditional lenders. I think that they serve an absolutely invaluable position in our market, especially here in Charleston, and I think that's essential. And then another thing is to understand how the bank that you're talking to underwrites the loan to ensure that you have what they're looking for. Certain banks at certain stages of the business cycle may be better suited for your needs, and other banks may step in later down the line and be able to offer you a product that would be best. And then the third one is to make friends with your banker. You'll know you know your business better than we will, and likewise, we typically know our bank better than you will. So putting those two people in a room together and letting them understand where each other's coming from, I think is an important point that is sometimes missed, where banks have often been a four-letter word, and our intention is to be your partner. So I think open lines of communication is extremely important there. So with that, I want to kick it back over to Stephen just to kind of speak through the application process, because I think there's a lot of questions around that as well. And hopefully we can kind of, pull the curtain back a little bit there for you.
Yeah, so just some quick feedback on our application process. Customers have the ability to apply online or through our local lenders, which include our local store managers here in Charleston, like myself, or our relationship manager like Mike. Try to make that process as user-friendly as possible and most convenient for you. Credit decisions are typically returned within 2 business days. We have at a little bit higher volume right now, so that may be a delay just a little bit, or it could be a little bit quicker than that. It just depends on the situation. The decision's usually returned with an approval, either conventionally or with an SBA guarantee added on. It could be countered with a different approval or decline there. At this point, the customer can decide to accept that offer or not at no cost to them. The lender involved with the application will be present to manage the entire process and see your loan through to closing. After we've closed a loan and you've received funding, the lender remains with you as your designated relationship manager for any future needs and advice there. So definitely want to continue building that relationship, not just now, but in the future as well. We want to be your go-to banker.
So with that, I think we touched on all the primary points. Certainly happy to answer any questions and hope that you consider TD Bank in the future. And outside of that, again, we'd like to thank Ruth and Christina and William for hosting the event, and we're always happy to participate. Appreciate the inclusion there.
Absolutely. Thank you, Stephen and Michael, for that. And again, I think now that we've been through all of the presenters, you can kind of see where we are. One thing that I think has really come across is that, commercial lending is not a one size fits all type of program or product. Every lender is going to be a little bit different. You may, one lender may tell you no, and you could go to a lender across the street and they may do the deal. So it just, use this word again, it all depends. We've heard that used a lot. And so that can be confusing. And so that is where I highly encourage you to go back to our resource partners and let them help you with your business plan, let them help you with your financial statements. And that can really help clear up some of the confusion for you, I think. So with that, Ruth, Brian, I think we probably have some questions.
Yes, we do have some questions, but before we get to the questions, I do want to remind everyone that this has been recorded and the information will be available on YouTube. And we also ask you all to please participate in the survey at the end of the presentation. And I will basically say this to all of our lenders. Thank you so very much that there's so many questions and so many opportunities that we see from our non-traditional lenders to our traditional lenders, borrowing from 5,000 to over 5 million. And that these lenders are available for startups as well as established businesses. And one thing I heard about 504 programs, and I oftentimes tell people, if you don't own it, you can't control it. It's a sad thing when you have grown a business in a retail space that you don't own, and then one day you got to give up that space. And so think about owning your own business. And so we're going to get quickly to our questions as we fill them out. And one question was, TD Bank, is there a flat loan traditional loan origination fee?
It's a great question. In most cases, standard is 1%. We can range down depending on the product itself. With lines of credit, it's more of a fixed fee at either 1% or $250, depending on how much the line of credit is.
Okay, great. Do you see a laundromat as a risky business endeavor?
I don't think that there's anything that stands out as more risky with that business. I think that coin operated, if it's more of a hands-off type laundromat, I think that there's always a concern that it's more of a coin op situation as opposed to a managed business. But with that being the case, I don't think that there'd be anything in our policy that would mark that as a less apt to lend to type business.
Very good. One of the other questions that we had here was about when can you apply for a SBA 7A loan? How far in advance can you do that?
So I think in most cases, we'd love to have the conversation early. The SBA process sometimes can take some time, and obviously the bank would have to be underwriting their piece to the request as well. So if and 7A could be a range of timing for businesses. So if this is a startup business and maybe we're looking to acquire a business, I may start that conversation 3 to 6 months out from when you're looking to purchase that. But obviously, you know, every scenario is going to be a little bit different. But I'd suggest that you want to have that conversation early, so you know what the bank would be looking for and what would be required from an underwriting perspective, and allow enough time for that process to work itself through to funding. But I've also heard situations where, you know, this process could take a significant number of months. So again, sooner's better. You know, always back to my point about making friends with your banker. You know, it's one of those things that you really want to have that conversation, so you can really get a good grasp on what that timeline may look like for the institution that you're working with.
Okay, thank you. And anyone can answer this question. I applied for a PPP. Well, this might be a waiver question, or someone who does PPP loans. I applied for a loan last year and was denied. Can I still apply for a loan somewhere else?
Yeah, so let me take that one. So with a PPP or Paycheck Protection Program, that program has expired. If you were working with a lender and that lender did not get either didn't submit your application, or we've seen situations where applications were submitted to SBA as approved, and then the lender at some point decided that the loan was maybe not eligible, or there was some other risk involved, and they canceled that loan. And if that happened, the program has expired. So at this point in time, you are not able to go anywhere else to apply for a PPP loan. That program is over.
Okay, I'm a jazz entertainer promoter, the New York Jazz Network, just starting out. What are my chances of my company getting a startup loan? Anyone can answer that? Hello? Am I frozen?
No, I'm sorry, Rob. I'll go first. Then. So I
Okay.
would answer that like it depends. I know for the loan fund, there might be some questions about like the jazz club being like a mission fit that I can see it going either way, to be honest with you. But from a startup perspective, you would probably need your personal financials are going to need to probably stand out to show that you could take on the additional debt personally, since you're going to be a startup. And then we would just evaluate the business plan, the location, and see if the business has any potential to be able to cash flow to service the debt.
Okay.
Yeah, and if I jump on that, I like what Joseph said. And yeah, I mentioned that we're a mission lenders. So that may be a good fit for us based on where it's located. You know, one of the check marks we look for is that our borrowers also employing those people from the community. So that's important to us. So it's also as a mission fit for us. But we would definitely look at particular business like that. I've done similar businesses to that. So that question would be one that, yeah, we'll look at and see how the cash flow basically is, basically where you're located, and are you looking to hire from the community?
Okay. And one other
We've got
question. Okay, I'm sorry, go ahead.
Yeah, I think we've got a really good general question here. So with an established business, I mean, we've been talking a lot about kind of personal credits, but with an established business looking for a loan, if they have excellent business credit scores with something like Dunn's or Experian, and maybe an average personal credit score, how would any of the lenders here kind of weigh that in terms of making a decision on creditworthiness?
Take that one, Brian. You know, as stated before, you know, with Optus Bank, we're not necessarily looking at your business credit score with Dun & Bradstreet or any other business credit reporting agency. We are looking at your personal credit and personal credit history, the story behind it. You know, what are the patterns around it, and we'll certainly look to get explanation behind it. So there's not a hardcore cutoff as far as your credit scores are concerned. However, one of the things that we're primarily looking for is the operations of the business, the profitability of the business itself. And so if your business is profitable, is cash flowing, where it's able to cover your existing debt and any new debt that you're applying for, that's something that we'll certainly take a look at and try to be creative and find out creative ways in which we can provide the loan for you.
Okay, and this is going to be our last question. Before we thank everyone for being here, to Optus Bank or anyone, do you do loans for commercial, multifamily, or owner-occupied units that would be used for a short-term rental business, Airbnb? Optus Bank or anyone?
I'll
I could
I'll
jump in
answer
there.
that with Beacon
Go ahead,
Community Bank. Okay, we certainly do that, and we've done quite a few in the overlay district here downtown. We've done a few in Mount Pleasant, and of course out at the Folly Beach and some of the other beaches. That's some lenders shy away from short-term rental properties. We have not. Now the underwriting requirements can be a little bit different, but again, it all comes back to cash flow and some people want to have a 25-year amortization. Some people are looking for more of a traditional mortgage 30-year structure, and we typically are in the 20-year range with extra down payment and more equity in the project. We'll happily consider a 25-year. So it really just kind of depends on the property. We've done anything from 15 or 16 beds, split up amongst 4 different units to single units that have 4, say 4 beds. But that's something we certainly are happy to do.
Yeah, and just to jump off from there, Brooks makes an absolutely valid point, and we kind of look at it the same way. From an underwriting perspective, which I think again is important for any borrower to consider. Here at TD Bank, we underwrite on a global basis, which means that we take into consideration personal income from any primary source of income. We consider tenant income if there's an investment piece of real estate. And then we also consider business cash flow, and that's all encapsulated in one underwrite. Now, the only problem with short-term rentals is because that's not a recurring, reliable source of revenue for the property. It's really kind of temperamental and can change from month to month. That cash flow that generally comes from an investment short-term rental cannot be considered. So that's generally not included in the cash flow underwrite, which puts a little bit more additional onus on the guarantor's ability to cash flow the deal. So in some cases, if that's a tertiary source of revenue for them, hopefully those primary sources can help cash flow that deal. So that's primarily the difference that we look at versus a more traditional investment piece of real estate with tenants.
Okay.
And I'd like to add as the
Go ahead.
commercial, I'm sorry, Ruth, go ahead.
Go ahead.
Okay, thanks. As the commercial real estate lender on the panel, that's all I do. I would say that they would not be eligible under the 504 if they're in areas zoned residential. To be qualified for the SBA 504, it's got to be in an area zoned commercial or mixed use for commercial. We don't do any investment properties or Airbnbs or short-term rentals. So that would not be eligible under the 504, but maybe other programs.
Right.
All right,
And
thank you.
And so again, we want to thank each of you all for participating. On the screen, we have all of our contact information for all of our presenters and lenders on today. And we'd ask you to please establish a banking relationship. Maybe you're not interested in borrowing money right now. Maybe you're not ready to borrow, but you must establish a banking business relationship, because we found that so many people lost out during the COVID and the PPP programs because they did not have a banking relationship. I asked you to please establish a business banking relationship with one of our panelists or someone nearest to you, because you're going to need a lender, and it's a bad time to establish a relationship when you need money. So establish it in advance. And William, we want you to please take us out in conclusion on today, but please remember to take our survey as well.
Absolutely.
William?
Absolutely. I'd just like to echo that what Ruth just said. That's very good advice. And to just close out, would like to thank City of Charleston, thank all of our lenders. And I've seen some questions we haven't been able to address, but a good source again is our resource partners here in Charleston. the Small Business Development Centers, SCORE, as well as the Women's Business Center. And you can also go to www.sba.gov/SC. We have a public calendar there, and we have all sorts of events. And you can, as well as you can register for our weekly newsletters. That's a great source or a great place to get current information. So thank you everyone again.
And thank you. And again, please reach out to our lenders with your specific questions. And again, this was brought to you by the City of Charleston and SBA. Thank you all for participating on today.